Today is Wednesday, May the 14th, and my name is Anne Marie, and we are going to go through profitable trade design and using key elements to figure out how we can trade in one, a risk constrained environment, and two, how we can start simple and then turn it into something a little bit more complex if we so desire. If any of you watched Top Step TV today, I had a young friend of mine come in to visit. Her name is Penny, and she trades in a very interesting space. And that space is one where she only uses a 1 and 3 minute opening range on regular trading hours. She stays and trades no more than 10 minutes long. And she has a very defined risk because she's a scalper. And so that's a very clean way of approaching the market. But the parameters that she holds are really about holding herself in check, which is where she gets her edge. So I find that to be super interesting. We'll talk about a few different things. I'm going to have to put on my readers. My eyes are tired. And hello. Hello to each of you. All right. First things first, we're going to do a swift review of what it means to look at risk, to use risk to define an information event, and then also, and also making sure that our risk holds to the kind of structure we want to build. Then I'm going to talk about market structure per se. I'm going to show you a few things that you can look at, and then we'll open it up for questions, right? So that folks can really push back and go, yeah, but, and so on and so forth. So let's go ahead and start where we started last week. We remember that risk management is job one, and it's a systematic process. For those of us who have started to journal and say, okay, I'm going to look at every trade and see what the market taught me and what I learned about myself, and then maybe what I can do with the next trade to make it better. That literally every question after every trade should be, what did I learn from this about what the market is doing? What did I learn about myself? And is there one thing I can do to get better the next time I do the very next trade? And if you take it step by step, you'll learn what the market is trying to teach you, right? And so when you say, hey, what did I learn about what the market is doing right now, right? And I'm going to make sure that I cover this because and I do want to say, listen, time is the only thing we spend that we can't get back. So I'm honored that you're here with me. I'm going to do the very best I can to give you the most clean and useful information because truly, time is the only thing we can't get back, right? And so I appreciate each of you taking the time to be here. It means the world to me. Right, we talked about these arbitrary stop losses. We talked about moving them. We talked about why they don't make sense. It doesn't mean that we have to say, oh, well, my risk threshold is 200, but if I take the trade here, I open up 500 of risk, well, then maybe you don't take the trade there. Maybe you keep your risk parameter relatively flexible, but you move down to say, okay, the only way I can take this trade is if it comes to me versus me chasing it. And that takes a lot of patience, right? So we're hit by price fluctuations. Today was a very rangy day. And then we get out early when we didn't necessarily need to, right? And so we talk about how do we measure what we do? How do we understand whether we're consistent over time? And literally, my joy would be to hear from one of you or many of you, hey, listen, I taught my best friend how to trade. I taught my daughter how to trade. I taught my nephew how to trade. I taught my son how to trade. That's going to be your best way to pay it forward for me. That's going to mean that would give me great joy. I would absolutely love that, right? Because you're using material that you can say, hey, I'm going to be able to enrich someone else's life, and they're going to be able to move the steps forward. I'm super excited about Top Step opening up a brokerage because literally you can go from SIM to XFA to live to pure brokerage where you can keep all of the profit all of the time, right? And that is it's the whole package. So super excited to see what Top Step is going to do there. The big things I really want us to focus on are to watch our emotional control. The one thing that Penny said today, she said, you know what, my edge is that I know myself. I know where I'm going to go off the guardrails. I know what kind of trouble I'm going to get into if I stay right here. And that is something that we really need to explore. If you've read Trading in the Zone by Mark Douglas, I'd say read it again. If you haven't read Trading in the Zone, I would say it'll be one of the best books that you will ever read. Honest to goodness. I have it on audio and on the physical copies, and I refer to them all the time. And so our goal really is to make sure we don't do things that reduce our confidence and our discipline, because as we build confidence, it's easier to build self-discipline. We want strategy consistency. We know that. We've got to have rules-based. No matter what the rules are, whether they're just a few or maybe a lot, you just got to stick to them. All right. Falls breakouts. We've talked about market-generated stops, the proper stops. It doesn't mean that you have to expand your risk. You do have to say, okay, I don't want to lose more than $200 a trade. And based on this market structure, unless it comes to me right here, I cannot engage. And that's also very hard. It takes a lot of self-discipline. And so we talked about risk management frameworks. I said, hey, listen, for prop firms, your risk does get expanded. When you go to live cash, your risk should be tighter. But as you're sitting in a framework where you have to make a certain amount of money to qualify and get over the humps, your risk gets expanded just a little bit. So you want your accuracy and your engagement to be worthwhile. And we'll talk a little bit about ATR. I like looking at ATR, but I don't use a fixed dollar amount based on that. I look at the market structure, and then I let the market structure tell me what I want to do. My thought is, if you lose 3 trades in a row, stop and go to paper trading. Stop your combine, stop everything you're doing, and literally write out your trades on paper or go to your practice account. Okay? And so tonight, here's our new material. Only 2 types of market structures, really. We're in trend or we're in a range. So an uptrend is going to be higher highs and higher lows. Very simple. A downtrend is going to be lower highs and lower lows. Range movement, going to be completely sideways. All of the movements in and out of a market structure break are going to be completely, somebody wants to record this. I can't let you, I'm sorry, but I can give you the recording. So, so validating the swing points will keep you in the frame. So, let's stop right here and look at what that means. Let me open up I'll open up Thinkorswim and I'll just get a blank chart. Hang on 2 secs. It's installing some updates. Music sounds like a bad cruise ship band. That's hilarious. Yeah, we want things to be simple, folks. Okay? Simple. And so let's just take one chart here. I'm going to maximize the cell here. And I'm going to delete everything on the screen. I'm going to clear all the drawings, even though that's NVIDIA. And I'm going to remove all the studies. Okay, and let's have a choice. Do we want ES, NQ? Which one do we want? Any thoughts? ES, NQ? NQ. All right, let's do it. All right, so we just learned from the slide that we have trends higher, which are higher lows and higher highs, or trends lower, which are lower lows and lower highs. And every time we make a higher high and a higher low, if you remember Hogue, he calls it time framing up or time framing down. It means the price action is continuing to move in that range. I have no idea why this is taking such a hot minute to get itself together, but all right, let me go to an hourly chart and see if that helps me. There we go. All right, whenever you want to look at a market, the first thing to do is to take a big stare at it on a daily, right? Now we have no drawings. We have, I'm going to delete the open interest. We're getting ready to have a contract roll in just a little bit. And so that's why those dip down there in that space. So all we are looking at here is volume and the candlestick prices. So let's go to the left. And what we're going to do is take a look at what a swing low to a swing high looks like. So there's a very obvious one. It's here. It's very big. So I'm going to use a Fibonacci. Nice and easy, because the 50% region is super easy to look at. That's a swing low to a swing high. You'll notice that there's also a swing high in here that pulls back to a higher low, and there's also a tiny one here. You could get very granular if you are so inclined. I prefer not to, simply because it just gets too cluttered. Now, the only Fibonacci's I have here is a 0, a 50, a 100, and a 150. So we're looking over here, and we always draw these left to right in the process of time moving forward. And so notice how structural integrity holds in the NQ. If I had this way back here in July of 2024 and had the low and the high, the very high of the market would have been measured and the double top would have been in play. That's still the structure we're looking at. As you can see, we're still inside of this first big move, even though we've got many others we can draw. So you can go to the left and build yourself a big framework and go, okay, this is where I'm going, right? That is market trend, market structure is moving up. The next time it breaks market structure is all the way over here. In the meantime, it comes back, breaks market structure to the downside, holds in the 50% range, gives me a higher low, holds in the 50% range, and then walks its way up to the bigger picture. as you make money in the market, you're going to be able to sweep cash off and put it in a portfolio that works for you rather than you working for your money. Right now, in a prop account or in a trading account, you are still working for your money. So at some point, when you get yourself to the point where you're consistent and you're making money, you always want to sweep a little bit off and go, you know what? This is in my savings account. This is in my portfolio builder. And many stocks will work the very same way using market structure. Okay, so now let's look for a structure to the downside. What you can do is, here's the trade, it moves all the way to the top, and you're saying to yourself, wow, it ought to hold the 50%. If it can't bounce off of that 50% and hold, the failed retest of that 50% should take me to the bottom of the range. If I stay in the structure, it won't break here. But if I break structure, I've got downside pressure that can move me underneath. So let me see if negative 50 works out here. Let's edit this drawing. I can't remember whether fibs do this. How about if I do negative 0.5? And we'll make this red also. Okay, look at that. Man, I love the market. It's just so structurally clean in so many ways. Now, here's the thing. First of all, I want to save this as default so I don't forget. So save as default. Okay, here we go. So that's a market structure that's moving upside. Here, how do you know when the market structure is breaking here? Well, the first thing that happens is you stop heading higher. So that happened over here. So very easily, you could be in the middle of this formation, and you could say, uh-oh, I have a market structure break up here, right? So easily, you could go, there's my market structure break. Now notice, and it's hard to see because everything's the same color, let's make this, let's give this a dash. Yeah, that's fine. Let's leave these with a dash so we'll know which ones we're working on. And then the 1.5. Okay. All right. So now you can see this newest one that has this market structure break from here. It's the 0 to 100. You could say, oh, there's a market structure break. If it doesn't lose the 50%, it's going to continue on in the direction of trend. So the big thing, not to get confused, is when you draw this structure and you go, oh, it's turning around. Then you can say to yourself, okay, it might be turning around, but as long as it holds the 50% of the range, I'm still going to have upshot. Now, you can usually tell that by having a moving average. The moving average, a bigger moving average, would keep you on the right side of the trade. Let's add one study just so that we can say, all right, I understand what's happening here. I'm going to keep it simple, right? Our goal is to be as simple as possible. And so this is a 63, or maybe it's a 50. I can't remember. I'm going to make it a little bit tighter. I'm going to call it a 14. Doesn't really matter. You don't want it too tight. You don't want it too loose. But if you have a market structure break and your moving average is still upward, you know it's got a mean reversion. You hear the folks call it a bull flag, all those kinds of things. As long as if you have a market structure break and you've got a moving average, you wait for the moving average and it tells you, you know what? I'm sitting on the right side of the trade. Okay, now, here's the next structure break. So the question might be, but Anne-Marie, how do I know it's going to roll over there? You don't. You don't know until after it's happened. So it's going to have a topping formation. And as you know, how is a top formed? First thing that happens, it stops heading higher. Second thing that happens, it breaks support. So I like to look 2 candles to the left. If it breaks that area, I go, uh-oh. Let's see what happens on the first bounce. To the upside, if it gives me another lower high, I've got myself a change in potential structure, right? And so you don't know what's here, but you do know that it's a likely retrace of the motion you had in the past. Because the market's fractal, it's going to repeat and have patterns like this, whether it's on the daily, the weekly, the 5-minute, the 1-minute, the 100 tick, whatever it is. Okay? So, uptrend market structure. Now let's look at a downtrend market structure. I'm going to remove this drawing because I don't want it to get cluttered. Let's say you come all the way to the bottom and you go, holy cow, and it breaks the ledge. Because this is the old market structure line, you always want to watch it recover. Okay? Once it recovers, you know that this market structure, this downward market structure, is now in a retrace. So what's it want to retrace? Well, it's going to try to get to that 50% zone, right? It gets to the 50% zone and breaks above it. You know it's very likely to get here, but you'll notice it's not in a straight line. Not in a straight line at all. How do you trade that? If you're staring something down and you're looking at a great big picture, it's totally different than if you're saying, okay, I'm trading level to level. So we had this on the upside. Now we're printing under our moving average. Here's how you might do it on a 15-minute chart. Let's say this is a 15-minute chart. That's your swing high. Excuse me. Swing high to swing low. Okay, what's the goal? If it comes into the 50% and cannot hold it, it's very likely to head to the bottom of the box, and then we've got the negative 50%. Okay? Now, I'm using Thinkorswim because it's easier to mechanize than TopStepX, and I'm just showing you the very broad ways because, well, I've been on Thinkorswim for 25 years. It's just very easy. Fibonacci's are very adaptable things. So, notice, high, low, lower high. That's a shift of market structure. I'm no longer making new highs, so I go, well, if I can't hold a 50, I'm going to head down to the bottom and then to the negative 150. And what I'm going to do is have a continual structure that moves down that goes, all right, that's there. You can draw a line right here to that negative 150, and then you're done. Remove the drawing. Now, the next time you draw the next structure break is when you have the next lower high, lower low. There it is. You're still sitting in this trade. Let's say it's a 15-minute chart. Let's say it's a 5-minute chart. As long as it can't bounce up above your 50, it's going to time frame down and your structure will hold. And so your next line in the sand is going to be here. So what we're actually going to do as we move forward is we're going to predict as best we can what we suspect the market motion is going to be like tomorrow in the NQ using these kinds of structural motions on the tighter time frames. And you can watch them work real time. Now, something super important, we'll talk about it in a little bit, but what I just want you to see is every time you have high, low, lower, high, that high, low, first piece of market structure. The break of that ledge or the loss of the 50-minute range on that swing high to swing low tells you, uh-oh, I've got some more price action to the south. If it gets underneath this area, now you know you've got downtrend. So the obvious question is, well, what if it holds that 50? Well, that's just like this one. This structure break up here that we drew just a few moments ago, it didn't get near that 50%. very strong, right? The 50% was way down here. And so all it did was dip, 14 simple moving average. It filled the gap, tested that moving average, and then began to hold. As soon as it breaks, it's back in the market structure trending to the upside. And that's simply how you'll do it. The more of these you draw, the more complicated things can get in your mind. Just draw them one at a time. And as soon as you go, okay, here's my high, low, I drew that. I want to draw where the negative 50 should come in. Here's my next one, right? And you can look to the left and say, I bet you it stops there. It might not. But if it does, immediately you can go, ooh, there's my market structure break. Can't get above the 50, it's going to rotate down. 9 times out of 10. Done? You're finished with that one? Starts rotating down again, you go, oh, all right. Here's my next. Lower high, lower low. You can walk it down with your moving average. Notice, see how it breaks that 50? Don't want to second guess yourself. When a trend is down like this, the best thing to do is go, okay, where's my old support? Old support is right over here. It could bounce up there. I'm short from up here. My trade structure is not broken until I get up over here. So as long as it does this, I'm in great shape, right? Great shape. I can either get back into the trade or I can stay in the trade and let it go down because I'm expecting it to go here, right? That's really where I'm expecting it to rotate all the way back down. All right. Once that's done, you're finished. Here's your next structure break. You're thinking it's going here. That's not a place to buy. The only place you buy is in the following way. 1, I fail to hold lower. This is low. It doesn't test lower, but it closes lower. Big, big, big deal. It closes lower here, and then all of a sudden, it shoots out of the gate. Now you might go, oh my gosh, I could have caught all that. Not on the daily chart you couldn't have. Maybe on a 15-minute you could have seen the rotation, but you wait until it stops heading lower. It breaks resistance. You go a couple candlesticks to the left, and then it pulls back and makes a higher low. Then you go, oh, I'm back in this old market structure. Let me see what that looks like again. You pop it right back up. Or you can draw a new event that says, all right, let's see if we move further down. What's going to happen here? Okay, so from that, we immediately see this candlestick breaches the 50%, pulls back, holds the edge, very likely for it to stair step back up into your last market structure. So it went from market structure down to recovery of that breakdown to a retest of that breakdown. Here's something else. Once in a while, prices will break the structure. Nowhere, it won't get to the 150%, but it will fail. When it fails, the anticipation is that it goes to the 50%. If you keep drawing structures and it doesn't come back to your 50%, it's likely that you're missing a structure here or there. Okay, so here it is. It breaks structure. You might go, ooh, here's my long. Now remember, if it falls back into here, your stop should be very tight. Otherwise, you're going to end up in a losing trade because once it has a structure, often, unless it's time framing up very, very rapidly, this structure will return and come in and test the 50. It's just one of those weird things. All right, so what's the next structure? Well, gosh, look at this new high. I got to get it here. Here it is. It breaks the 50, one candlestick. The next day, moves up. Now you might say, wait a second, that is a reversal of structure. Here's my bottom. I, I could take the long there. Yes, you could. Your stop would need to be tight, because if not, it could turn into one great big leg downward that could move much, much further. So don't predict what it is that price action is actually going to do. Anticipate, but then watch for confirmation that you're correct. So if a level is going to hold, what happens? Fails to hold lower, breaks resistance. That doesn't happen for really until this candlestick, and then pulls back and holds a higher low. You might say, well, gosh, I mean, I'd have to get in up here. You could, but you could also wait. Once it closes above that 50, you can wait for a retest of the 50 and go, all right, my stop is right there. If I can take it, I'm going to do it. And then what should it do? Go to the top of the box. Once it goes to the top, you're going to go, oh, wow, that looks like it's breaking out. I know it's supposed to return to structure, so maybe I take the short here. You could. Your risk is up here, but this is where frameworks matter. Yes, you can say, wait a second, that should fall right back in. I could be in a very sideways pressure event. But if you get into a short, or long, and let's say you're on the breakout here, you have to look inside of the box to see if you can manage the support leg. My thought is, let it come in, shake it down, and confirm around these very important lines in the sand to tell where you're going, right? You got to tell where you're going. Now, let's say you're thinking to yourself, oh, you know what, this whole market is sideways, this is a short. And you take the short as it enters into the framework, comes back down in the area. If price doesn't move in your direction after 4 or 5 candlesticks, it means that buyers are coming in here, right? You can see the buyers coming in here. And so if it resumes out of the box, you go, you know what? Not a short. I'm going to go back to this one because the old formations give me my structure. And price action repeats itself. I'm going to look at the big framework and I'm going to say, all right, I'm getting rid of that one. And now, here I go, and I'm going to try to get up here. How do I know it's likely to get up here? Well, am I making higher lows and higher highs? Could you draw market structure frameworks all through here? You could, absolutely. But what ends up happening is you get so many of these Fibonacci sitting all over the place. You're like, what am I looking at? You need to think of big picture. Big picture. High, higher low, higher high, higher low, higher high, higher low, higher high. Retest of my higher low. I don't break the edge. There I go up to the range, right? Very easy structure. Now, we notice from this wild and wonky line, we never get to 22,800. Could be that we don't get there until, I don't know, later on in the year, next year, 5 years from now, who knows, right? We don't know what the market's going to do from that perspective. The takeaway is this. Market structure is simply looking at and watching. Am I making a higher low and a higher high? Or am I making a lower high and a lower low? That gives you your trend and your setup. So now let's take a look at the market here in the last little bit and see if we can tell, and I'm going to delete this to make it nice and easy. Let's see if we can tell what's going on with the market right now. Let's measure the great big wave all the way down here, 16,000. Here's our 50%, right? Well up over the 50%. What does it suggest? That we are headed back to 22,300. Like it or not. That's what it suggests. Now, we've got a support structure here that might give us a little bit of trouble. That's also an implied volatility move for the week. It could pull back a little bit, come back and test this old zone. But this is our likely target, whatever gets there. All right? Now, we know the 50% is here. It's not really telling us anything. We had a market structure break when it lost this low. That's definition of a break is the once I measure the wave from high to low, I either break the high, that's a market structure break, or I break the low. At which point, I can draw another formation. So I'm going to draw a smaller one because this is where our first market structure break is. Right here on this edge, 50% level. Doesn't quite get to the level. Remember what happens if you have a market structure break and you get a bounce off of a zone. That's, I've made a swing high to swing low and it starts to bounce. That means I can draw the wave. If it doesn't get to the 50%, probably headed to the bottom of the box, right? And so we see it here. It gets to the bottom of the box, and then we have another market structure break. So we can walk it down, right? The market structure break here, easily we can look at this and say, well, I don't want to draw too many of them. But we have this, and we have our negative 50 breakdown area, and we can move in that general direction, right? We trade it. We've got the framework. It gets to this edge. It moves down a fair bit, right? It moves down another 1,000 points, right? But the framework is saying, hey, this is what we've got going on here. That's the edge. Yes, you can trade it down here, but you know, as soon as it closes above this area, you've got yourself another market structure event where you have a swing high to low. That's all you're measuring. Hey, is this a peak? Is this a valley? Is this a peak? Is this a valley? That's all you're doing over and over and over again. Here's our next big one, right? We're well over it. This one is projecting higher from the formation. And right now, we've had, here's a market structure event that was, here's a low, here's a high, here's a low, here's a lower high, and then a higher low. That tells you, okay, if I'm holding the 50, I should get up here, and yet I have another Fibonacci formation telling me I've got these lines up in the sand up here. So dips, clearly buy zones right now. Let me move this one back so I can eyeball what the 50% retrace is right there. Okay, 20,700 to 20,500. So we might come back in to this formation before we hit up, but that's going to give us upside structural breaks. Okay? All right. Now, next thing we'll do is let's get back to what we're looking at, right? Range motion. We did not measure range motion per se, but when a market structure falls back into an old market, into that same space, it becomes a range. It's no longer a trend. So when that structure retraces itself, that's what we're staring down. All right? So, next. What is a market structure break? Violation of the swing high or swing low. It loses the level. It indicates a potential trend reversal. Now, we saw a few times where it broke and then recaptured, and it broke and then recaptured. The confirmation in general is a candle close beyond the swing level, either the breakout or the breakdown. But I would say, instead of just looking for one candle confirmation, look for something that says sellers are going to join me or buyers are going to join me. So you might go, well, how does that look? What do you mean? We'll go back to the same chart. If I'm looking at something, let's say I'm thinking it's going to hold the 50%, right? It comes into that area and it breaks. So initially, if I'm thinking high, low, lower high, lower low, lower high, hey, this is going to break all the way down. A lot of people thought that. A lot of people thought that. Here's the question. If you think to yourself, hey, I'm going to take this short because I lost the level and this is a failed retest, where should your stop be? Right up above that 50%, because if I'm trading above the 50%, it's more likely to move here. So this is sort of a tug of war event that's sitting right there. So rather than say, hey, I'm going to take this short right here, you might look at it and go, okay, if I take this short, let's say you take it the day this opens up, right? The very next candlestick, you go, ooh, it just broke down. I'm taking this. If you take this and it immediately begins to go against you, that's usually a problem, right? Immediate reversal. Have you ever taken a trade where you go, oh yeah, this is it. And as soon as you get in, it runs against you and it never turns back? That is a clear signal that your timing or your rhythm is off. Truly. Every time that happens to me, I get out immediately. I go, no, you got this the wrong way. I'll take the paper cut and I'll reset the formation and I'll go, wait a second, am I really seeing? So, a lot of people thought this was going to break all the way down when it gave us the high, the low, the lower high, the lower low, the lower high. They thought, oh yeah, it's going to run. It's going to run down. But it didn't. And the key line is it recaptured that 50. As long as that 50 holds, it tells us the traders are going to try to claw themselves back up. It's just the nature of the game. The market is naturally bullish from those sorts of structural behaviors. All right, so that's how you go, That's how you say, hey, listen, is the confirmation below the candle close? One candle is never going to tell you structurally what's going on. Step back out and look at your most recent formations and go, wait a second. I think this is going to go down. Great. Take the trade, set your risk. If you look at it and it starts moving in the other direction, a lot of us try to dollar cost average because we think we're right. Don't do that. It never pays dividends. It might once in a while, but in the end, you're going to blow up. You're going to blow up. It's just what happens. Okay. Bullish market structure break. Previous lower high now has a new higher high. Right? Transition from downtrend to uptrend or continuation of uptrend. Entry point, wait for a pullback to the new higher low. That means old resistance, new support. Old resistance, new support. Set your stop below the new higher low and take profit at the next higher high. Now, this is if you're scalping, really, not if you're holding on for a long trending event. So let's talk through this. The previous lower high is now replaced by a new higher high. This means we are moving from negative pressure to positive pressure. If we have positive pressure continuing, our higher high is now going to turn into a higher low. I'll show you what that means in a second. That gives us continuation of market structure. This talks about the reversal of downtrend to an uptrend. They say wait for a pullback to the new higher low and then move out. Sometimes that's not going to give that to you. Why? What if the breakout is steep? If the reversal is V-shaped, it's not going to pull back to the higher low. It will pull back to the lower high. So we'll take a look at that. And then where we set the stop, that's going to be the next important thing. Setting a stop is going to be very important because risk management only works best if you're sitting in a structure that works. So now let's go to real time. Let's go to a 15-minute chart. And before I do that, let me remove this drawing, and I'm going to do this swing high to the swing low. Right? Just because I can have it. All right. Here we go, 15-minute chart. Now we're going to look at the market. Big picture, right? We can see very clearly that the market structure over the last several days has been time framing up. Super messy, sideways, but time framing up, and then super messy, sideways, and then time framing up again. So likely that it's going to be super messy sideways here with potentially a pullback to 21,000, right? If we take the time to stare at the market from a wide angle lens, we can see sideways action, breakout, sideways action, breakout, sideways action, breakout. Sometimes the sideways action lasts days and days. Sometimes it just lasts one day, day and a half. Same thing here. Here's a V bottom moving into the space, but breaks out sideways based on coming back into old resistance and support. It moves up. So the question is, all right, how do I set up a trade using market structure? What's it telling me? Okay, so we're going to look at carrying along market structure wise pullbacks to support. Okay, nothing, no moving averages, nothing at all. We're going to go to swing low to swing high. This is the first one. All right, big giant daily formation right here. Let me turn this into that so we'll know it belongs to a different Fibonacci. Okay, this is a big daily price pattern. So when it comes into the daily on the 50, it's not going to resolve really easily. It's going to be pretty messy. And so this ends up being a range-based formation, doesn't come into the 50, so it holds that zone. See how close it gets to the 50 once it moves up into the space. Now, as we get higher and higher, right, when it goes to the top of this zone, you can see it rotates right down and comes to the 50%. Right? Now, how do you know it's going to do that? Well, we don't. We really don't. What we do know is, right now it's not coming to the 50%, so we have bounce action into resistance over and over and over again. Right? Every time we make a new high, just raise your Fibonacci into the next zone. It keeps you nice and clean, and you can go, you know what? This thing is trying to break out. I know it is. If it's trying to break out, I'm going to watch for the lows, because see, it's popping out there. It's popping out and holding and popping out and holding. So as the first piece of structure comes in, you draw a line right there and say, all right, I'm going to watch that zone to move. In the general space, if you take the long, realize that to the left, you can have yourself a fair bit of price, right? You don't know the structure is going to move up here. You just suspect that if it's been dancing around for 5 hours there, or 3 hours, that it's probably going to move back up into the 100 marker, right? And if it dances around here and can't get up, it's probably going back to the old support zone, okay? So here's your choice. You can look at the chart, you can build your framework, you can look at the chart and go, you know, this looks terrible. I'm not trading this. I'm not trading it until I get a market structure break. Keep moving it up. It's not breaking the bottom of the market structure, so you don't have to change it there. Keeps moving up, keeps moving up, keeps moving up, keeps moving up, keeps moving up. It's still the general structure. because it's falling right back into the old areas. When it breaks, you can easily go, oh my gosh, I missed it. It came down to the 50%, turned right around, and started moving up. There's your structure break. Where's it going to? Very likely the 150 line. Now, it takes 2 days to get there. So intraday motion, you might be saying, holy cow, I better be careful looking for any kind of structure that tells me I'm going to be moving into very big daily formations. All right, so now, if we go to where we sit right now, and we say, what is going on here? Clearly, it's in that same kind of formation. Structure popping out, structure popping out, structure popping out. What happened the last time? At the top of the structure, and we'll use this one, this wave. We'll keep it at the low. At the top of the structure, it faded into that 50% line and then broke out. That's one of the things that happened. The next thing that happened is it held that 21,240. That was the line. If you listen to the video this morning, the Moneyball morning report this morning, that's the number I said, hey, that's the number to buy the NQ at today, the 21,240. Came right into it, did exactly what we wanted it to, and it's off to the races. Let's go back to the old patch that was sideways, 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 building the wave, so we can say, oh, past to future. Here it is. This is the area that I think the market looks like right now. It looks like this zone to me, right? It's bouncing up a little, and then up a little, and then up a little. Same thing as up here, only it's smaller. It's a smaller formation. Up a little, big savage move down, and then it's off to the races. Would not be surprised in the least if that's what ends up happening here, right? So, how do you look for that? First thing you want to look for is a structural break. If I'm sitting in this formation, and here's my high, here's my low, I'm still sitting over here. What's going to be a break? Well, a break is not going to come for a really long time. So you might say, all right, well, what if I draw one of the smaller structures? What if I go from here to here? Right? If I hold this edge, notice, look at how nicely it runs, even beforehand. Afterwards, it makes the space, loses the 50%, recovers the 50%, goes into the previous congestion zone, pulls back and holds the 50%. Structure really does look upside, right? Low, higher low, retest of a low, and then higher low, right? So now we're coming into 6 o'clock. Here's the gap. What would be the trade? I want to see if it can come down into 21,328, right? You might go, well, what if I take a short right there? Well, you can, but your stop is going to have to be 40 points wide. So you don't want to do that, right? You could take it, but your risk is going to be very outsized. Your trade should be holding the ledge and getting into prior resistance, or breaking the ledge and heading to prior support, realizing that if you're still making higher lows, chances are you're going to run into buyers in the next space, right? But this market structure event here, that's tighter on the last big set of moves, suggests that price action is going to come down into 21,328. Okay, so that's how we look at that. If we're looking at a range break that says, hey, buy, my note said, hey, listen, if you're looking at something that's a range break that's turning around, you want to buy the higher low. So that would put it maybe here. If this was moving down and then it turned up, you'd wait for the pullback. Really, just think about it like this. What is old resistance, and can that be new support? And then you give it a test. But everybody's got to have made the same decision. That's what makes a good line. Everybody made the same decision. Everybody said, oh my gosh, I gotta buy, I gotta buy, I gotta buy. All right? So, market structure, nothing else. There are all kinds of things we could talk about. We could talk about opening range trade, which I absolutely love. It is so good at telling us what's going on later. I can't even tell you. Take a look here. This is the opening range, 1 hour. The first 15 minutes of the formation, it actually ends up being the 1 hour low. Price comes into that edge, bounces right off of it, and there's the trade. So a lot of very beautiful things. We're not going to talk about them now because the goal is, can I frame out the market? Can I frame it out? Old resistance, new support. You look for the structure and position it. And don't second guess yourself. Say the following. All right, in order to take this trade, I want to see 2 5-minute candlesticks close above it, fail to stay lower, breach resistance, pull back and make a higher low. You can put your limit order right there and wait for it. Listen, if it doesn't come for you, there's a million other trades waiting for you. Okay? A bearish structure break, right, tells us that it's rotating bearish, higher low, hot from a prior higher low to a new lower low, and then a prior high to a lower high. You pull back, old resistance, new support, you set your stop loss underneath. Now it's saying take your target to the next lower zone. You'll be looking to the left for the last time you had a swing low or a swing high on whatever time frame you wanted to look at. All right. First, verify the break by watching the candle close. Wait. It could be that it just comes down a little and then continues to run. So you've got to wait. When it confirms, you know two things. It can come back to the 50%, or the trend could be so strong it would collide with a moving average or higher support to take you in the upward direction. And of course, the reverse will be true. If it breaks the low, you wait, see if it retests and goes back into the range of the structure, or if it fails. If it fails, you can take it down, but if it doesn't go into that 50% range below, it could be that there's prior support or resistance that is standing in the way. No need to use volume at this time. Simple things. Am I making a higher low or a higher high? I'm going to come back in to my last higher low, and I'm going to take that trade into a new high. Or I'm going to take it at my last higher high, and I'm going to take it off into the next expansion to the north. Position your stop loss outside of those edges so that you don't get unnaturally stopped out. And you'll have to look to the left to go, all right, I see what that support is supposed to look like. All right. This, I talked about intraday traders. We use market structure. Some of us use ATR. You can add time frame analysis. The goal is pure focus and saying, okay, can I look at this chart? Can I trade it, or is it a garbage chart? So let's take one more look. I know we're getting to the space where we need to leave time for questions, but seriously, what in the world? This is truly a garbage chart. It's very range-based. All the candlesticks are retracing each other. It's just awful. It truly is an awful-looking chart, which is why I think it'll go to the bottom of the structure before it moves to the top of the structure. But it's a very risky patch. So taking the trade just because it's there doesn't mean it's ideal, right? We have higher lows and higher highs. That means if it comes into here, probably going to be a buy, not a sell, right? And if you try to buy it and it does something like this, set your stop tight. Set it, 10 points underneath. That's $20 for a micro, right? Something like that. Just set it underneath. And when it pulls into that space, if it stops you out, go, okay, let me wait for it to do its thing. Or you wait for it to do its big noisy patches, and when the price action starts to recover nicely, then you can take the trade. Well, to me, the only thing that's going to look nice here is a break of structure, either to the north or to the south. Anything else is garbage at this juncture, in my mind, right? If we take a look at something that's trending pretty nicely, gold's been trending really nicely. It's probably still, there's a lot of it, just pure sideways action, absolutely pure sideways action. But, yeah, I can't even find a chart these days that looks good. How about, let's look outside of the futures, see if we can find something that's really nice and clean. There's nothing that looks clean. It's all garbage. Right? Notice, see this pure structure break. Absolutely fantastic. Right? Breaks the 50%. One candle, and then it starts making higher lows. That should tell you low, higher low, higher low, higher low, higher low. Retest. The first deep dip should tell you, okay, I've got a bunch of higher lows. These guys better come in and hold this. If they don't, I'll take the short on the failed retest. But lo and behold, they had a massive earnings beat, so it looks absolutely fantastic. So, hard to find futures contracts right now that look very good. They don't. They all look like garbage. Truly, they all look like garbage. Okay. A lot of people use the 14 ATR on a 5-minute chart to give them ranges for stops. I hate having to calculate anything. I use my eyeballs to do everything. But if you are much more structured, you can use the 0.5 ATR to 1 ATR for a buffer. I think the market is a lot better at telling me where traders are likely to come in and leave, rather than using pure calculations like this. But it takes time and effort staring down the charts. And I'm going to give you guys this PowerPoint after we're done tonight so that you can review it. Okay? So, how do you know how to tell if you are in a broad base of motion? 1 hour to 4 hour charts give you directional bias. I like to use the day. But a lot of intraday traders slip down to the 4 hour, slip down to the 1 hour. 15-minute charts, you can draw structures and zones. They're nice and easy to do. I prefer using, because I try to trade longer periods, so I have less to journal. I build my structures, my framework structures on the hourly candlesticks. But sometimes when charts are very choppy and they're trying to find a way out, I will go to the 15-minute. 5-minute is your entry trigger. And you want it to enter at the base of the structure, at the middle of the structure, or at the top of the structure. Anywhere in between opens up the risk. So if you think to yourself, I wonder how I could game that. You build smaller market structures. Instead of a 1 hour market structure, you build a 15-minute market structure, so the range is not so wide, but you still work in the direction of those ranges. Middle of the range, top of the range, bottom of the range. And so there you use your 5-minute entries. If you're going short, first thing, 1, fails to hold higher. 2, breaks support. That's 2 candles to the left. If we're going to the downside, look 2, 3 candles to the left. If it breaks that support, you wait for the bounce. And the failed bounce back into the structure gives you the short, and your stop is clearly defined by what the market has said. Hey, only sellers up here. We got no buyers up here. So you know the market has told you where the sellers are sitting and where you'll be fine to have your stop. Okay? So, a lot of people like to use the Globex session for volatility, 9:30 to 10:15. I think that's, I don't use Eastern time zone, I don't use regular trading hours, but I do use the Globex session to show me the ranges. And when ranges are tight, price action will slip above and below, so you've got to let it resolve out of that pocket. Yes, CL did look a bit better. You're right, I could have looked at that one. All right, summary. 1, identify market structure. It'll tell you the volatility, but you can also see that by how wide the peak low to swing high are, and also how tall the candlesticks are. But if you like, you can put an ATR on there. Trade with clear support levels and return to risk logic. Now, here's what I mean by that. Let the market tell you what the risk is. Let it fail the level. Let it hold the level, right? JJ, VWAP trader from the micro traders room, the micro futures room, he calls it a look above and fail or a look below and fail. And so it moves back up into the structure and it tells you the swing low holds as the swing low. If it recaptures, you can trade it up as high as it'll go, into the 50, into the moving average. If it's turning all the way around, it's going to blow past the 50 and end up trading in the other directions. Trade only during the areas where you see the market structure hold. What's that going to do? It's going to confine your entries and exits to specifically defined places where you've estimated and calculated all your risk, and you know if you're doing it anyplace else, the little voice in your head should go, if she was watching me, she would probably ask me if I was sure about that. And then after that, you can track the performance through the formations. You can put as many of those market structures up, take a snapshot of it, and go, okay, this is what I saw from the big picture. I'm looking at these formations. Did I do it right? Did I hold myself to task? Remember, one moment at a time, one trade at a time, one day at a time. Logically say, I am doing this because. Build a framework. Now, you might look at this and you might go, I kind of like that, but I think it would be better if I added whatever, some indicator that you love, right? Whatever you like. Some indicator that you like, right? Yeah, it's still awful. The market structures are horrible right now. There's just so much risk. People are very nervous. Markets don't move like this normally. But again, you can make these as little or as big as you want. If you say, hey, I'm a scalper, right? You might start and say, okay, I don't care what the broad market's doing. I am going to try and trade this structure right here, right? I got swing high, I swing low. Oh, what do you know? Look at that, 50%. Who knew? Listen, when you start drawing these, your brain is going to go, what? How could this have been so right in front of my face and me never seen it? Trust me, I know. I honestly know, right? But you can look at this and go, all right, well, it should hold here. So whenever this starts printing, which had already started, right? If you go, all right, what do I have? I have high, lower high, lower high, lower high, low, lower low, lower low, lower low. I've got a break there. There's my higher low, and then I've got the retest. So What's this thing likely to do? Who knows? It could bounce. It could not bounce. But what does the rule say? Wait until it develops a structure there. First of all, has it stopped heading lower? Yes. Did it bounce into resistance? Yes. Has it pulled back and held a higher low? Well, I don't know. Over here I know, because it held my higher low, gave me a higher high, came back, and still had another higher low. Okay? I don't know if that's happening here. I could have a continuation structure break, but the rule says wait and let the chart resolve. Now, if you say, I hate that, then tweak it some way that you can that manages your risk. If you go, no, I feel certain it's going to move back up. I'm not so sure. I actually would not be surprised if, we had to move down into old resistance support areas, well below, and then indeed retrace the levels. I wouldn't be surprised at all. But we don't know here. And we really cannot take the trade until it confirms. Up the edge here, okay, all right, I think I'm going to draw my line there because that looks kind of toppy. So what do I want to do? First, break support. Well, support's kind of down here, but I suppose you could make it here. So fine, I break support, I bounce, fail to make a higher high, and so this stick gets to be my next stop, my next entry short, and my stop is just above the market structure break. Am I going to have to hold it for a while? You betcha. What is that? 1, 2, 3, 2.5 hours before it starts paying you. But as long as you've got the structure break, fails to close higher, comes back into support, breaks support, bounces, and fails to make a higher high, the very next candle close, that's your trade entry, with your stop at the top and just over the market structure edge for the market structure break, right? So there we have it. Any questions? I think you can unmute yourself. I think you can. So if you have any questions, hit me. Did it make sense? Enough so that you can replicate it is the thing I care about. So what I'd love for you to do is just blow up my DMs with pictures that you drew that said, I'm doing that. I only found one PowerPoint. How do I fit? I'm going to give this one to you, Esther. I'm going to get this one. Yes. It is a lot of information to pack in. And remember, we can always overcomplicate what we're doing. You'll notice that I only drew in the direction of left to right. I could have drawn something from up to down in terms of instead of down to up, which is how I measured most of these. You can do it any way you like. Just remember, you want to go swing high, swing low, and the wicks matter. The wicks absolutely matter. Okay? So, how do you structure risk? These are great questions. Okay. Purse. Okay, these are awesome. Okay. Oh, nice. Love it. That's what I want you to do. I want you to say, okay, I know how I like to trade, but can I use this to make my trade just a little tighter? Right? I don't want to force you to trade like me. I want you to see what structures are hiding in there that you can lean on and go, I can do that. Okay. How do you structure risk when looking at breaks of support or resistance? When the swing point is far away? That is a fantastic question. For instance, let's have a go. Swing point super far away from here, right? drew this big wave. What am I going to do? You can build smaller waves. And so you can go like this, and you can look for real structure breaks. They're hard to find here, but you can easily go, okay, here's my structure break. I had a swing low here. Here's my high. I found support here, and it started running up. That's a market structure event on a very tight time frame. Now you go, ooh, there's my 50%. I know I need to fail it. If I fail it, I'm going to keep my eye on that. I'm going to stay short. I'm going to watch for the next market structure break. Notice how noisy oil is. Here's the next structure break. It's actually only 2 candlesticks wide. Look what it does. High, low. Comes to the 50%. Dances around it for time and time. Remember, if it stays around there a long time, it's going to break in the direction of trend, which is down in the near space, right? So when the support and resistance structures are very far away, you can look in the tiny time frames and go, okay, swing high, swing low. All right, I know what I'm doing here. All right, this breaks down so much. Let's do the -1 here and see what we get. 1, let's go. -1. Uh-oh. -1. It doesn't. Where's my -1? 1, -1. Didn't give it to me. Oh, what a knucklehead. Always operator error with me. It's never right. So you get to do it in both areas. It continues to move down. This really is the next market structure break is not until way down here. So here we have a high and a low. After it goes here, hits to the 50, can't hold, but it's sitting inside of this formation. Remember, as long as it stays inside the structure, the trade is going to be any place here on the outsides of the structure at the 50% or at the 100% or nearby. It doesn't come to it, breaks down, here's the next market structure break, and it goes down into, that -50. I think that's probably the -100 also, but who knows, right? So that's how you do it. You just build tighter ones inside of the tight spaces. Just don't do so much of it that you make yourself go insane. How do you handle overcomplications? Yes, oh my gosh, this is such a good question. How do you handle overcomplications of different strategies that seem to cause confusion? We have this notion that more is always better. And if I just learned this one little bit, I'm going to get even better. But I'll refer to Penny again, who was really, I hope a lot of people got what she was really saying. She said, know yourself. Know where you're going to go until. Hey, you know what? If I get into a space where I am dollar cost averaging in and I keep adding, I better cut and run right now because I'm on tilt. The key event to understand is the following. Markets move up, markets move down, and any trade at any time in any space could be a winner or a loser. For instance, let's say I took a short right here, but I held it to right here. It's a positive trade. Let's say I took a long right here, but I held it to here. It's a negative trade. If I held it to here, or I held it to here, it's a positive trade. What does that tell you? something super simple. Prices move from support to resistance. And at any time, the price action is either hunting support or hunting resistance. And if I can just take a look at price action and say, where is the last time I actually saw real support or resistance, and look to the left. Resistance, resistance, resistance that became support, went to a higher high. If that was resistance that became support and that went higher, I'm going to guess that I'm going to get support at this baseline here. I'm going to be able to buy here. If I see it moving here and I can't move up, then I have to say, uh-oh, what's standing in the way here? Look to the left. If you look to the left and you see a big, broad line where traders battled around the price and lost, guess what? Chances are that's going to move. So throw out all the big, fancy strategies for now. Think support, resistance, swing high, swing low. Support, resistance, swing high, swing low. And then say, chronicle to yourself, right? Let's say a lot of traders jump the gun when they're a little early. They go, yeah, it doesn't matter if it comes back on me. You know, a lot of the traders that we have on Top Step TV will do that sometimes. They'll jump the gun. They won't wait for the structure to prove. Listen, I do that sometimes when I'm on TV. You get the wiggles when people are watching you trade live. You do, you get the wiggles. So let's say you go, I want to take this trade long. But normally you trade CLs, right? The regular CL contract. Take a micro. If you have to get in right now, take a micro off of the edge so you can manage your risk. And wait until the structure tells you you've got price action in your favor. Now, I'm terrible at drawing trend lines, but I can't tell you this. This price action event isn't that bullish. It's trending down. And so if I'm looking for upside pressure, and all of a sudden I go here, I go, all right, let's see if it pulls back and gives me a higher low. Here's my last high. So if it pulls back and my last high gives me a higher low, I get to take that trade there. If I take it and it runs all the way down here, well, I know my stop is underneath this zone. It's underneath this zone. So no matter how hard you strategize, every time you take a trade, it could be wrong. The only thing you can manage is how much you lose if you're wrong. You don't know where price is going, so ultimately you have no idea if it's going to be a risk to reward of 2 to 1, 4 to 1, whatever. You don't know price is going up. That's what you hope. But the only thing that you have complete control over is how much you lose. So how about getting really awesome at the only thing you can control? Stay down there. If you go, all right, you know what? I'm going to wait for this here. I'm going to wait for it to break, recover, and hold. Or I'm going to wait for it to break, try to recover, and fail. And then I'm going to take the trade. Right? Broken market structure. This edge here, here's my high, here's my low, hasn't gone to the 50. If it breaks that edge, that's going to be a market structure break. It's going to fall into these spaces right below. Just make it simple. 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 And then go, all right, I think I can do that. And don't take the trade until you have confirmation that you're likely to continue because volume and trend are moving in your favor. Right? Okay, next question. How should we define a pullback? I hear the term art versus science kind of thing. Love this. Is pullback art versus science? No. However, pullbacks come into squishy spaces. For instance, big trade moving up here. traders watching this action and they go, wait, I'm going to wait for a pullback. For me, the pullback is going to be old resistance. That's new support, right? Most of the traders are going to have the exact same thing, only they might be looking at a 3-minute chart, a 100 tick, da 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 da. They're just really looking for something to come in and old resistance becoming new support. That's all a pullback is. Or they say something like, I'm going to wait for a liquidity grab to go short, right? What's this? Well, that's one of those goofy lines that says, because this is from a daily time frame, it says, hey, looks like a break here. I call that a failed retest. But again, that's a liquidity pop into old resistance, old support that becomes new resistance. So if you hear the word pullback, what they're saying is old support, new resistance, or old resistance, new support. That's all a pullback means in the swing low, swing high formation. Oh, that's awesome. I already added some from the first session and had a great week as a result. Oh, that makes my heart happy. I keep over trading like a maniac. Hurts my ego when I take a loss. Listen, I have to tell you, I know exactly what that feels like. What we end up leaving the day with, though, is shame and regret. And that does more to undermine our psyche more than anything else. And so I would say this. You know what you're doing. You know you're overtrading. You know it hurts your ego. You know you hate taking a loss. So you say to yourself, self, I have to understand that losses are part of the game. They're part of the game. I have to understand that no matter how good I think my strategy setups are, losing is part of the game. If you can realize that and say to yourself, it's not how much I can make this trade. My goal is to get into a space where I have opportunity, but I lose as little as possible if my opportunity is not there. You know what I'm saying? We have to understand ourselves. We don't want to be wrong. We don't want to fail. We don't want to tell people that we failed. We just don't want to do that. It really hurts our insides. Look at that break in oil. I'm so kaboo! Oh, I love the markets. It's so fantastic. Sorry, I'm such a nerd. Thank you for the patience with me, folks. So just realize, hey, it's a thing. It happens. Everybody hates losing. We all have a tendency to overtrade. We just have to find a way to create an environment that gives us more control over what we are doing. And when we cannot exercise control over what we are doing, we need to step back and protect ourselves. It's like saying, if you have an alcoholic friend, you're not going to go, hey, come on, let's go to the bar. No, you can drink soda while I, toss back whatever. You're never going to do that if you love your friend. You're never going to take your friend who's trying to quit smoking to a cigar bar. Just say to yourself, listen, I'm not in control right now, and my goal is to be in control. And so I'm going to step back, and I'm going to build guardrails that help me be controlled. I'm taking way less trades now. It's working. Woohoo! And I wait on better trades or don't trade at all. Absolutely love it. Absolutely love it. I listened while driving. It makes a lot of sense. I'm going to rewatch it so I can see the chart. I'm sure it'll make more sense. Absolutely. I appreciate you listening while you're driving. How do I DM you if you're not on the friend list? You can actually, I have my DMs open. So you can DM me anytime in Discord. Anytime. DM me with your charts, your work, whatever. Whatever. It's my pleasure. It's my pleasure to share. It's been hard transitioning from scalper to holding. This method could help. small increments. The question might be, why do you want to stop scalping? Maybe you go, I just want to trade less. I'm exhausted. Okay, that's fine. But sometimes our temperaments are built to smaller scalping events, right? We're built. The problem is what we end up doing is scalping on these 1 or 2 minute time frames where we don't spread the market wide open to go, oh, I see what they're doing. I see what they're doing right there. And so you could still be a scalper if you're so inclined, but still take less trades looking at wider ranges. Scalping doesn't necessarily mean high activity. You could have low activity and scalp for bigger moves in a general direction. There are all kinds of ways. Thanks so much. What is your approach to partial? You mean partial exits? Yeah, it's great. Oh, here I have some takeaways. The full summary is sitting in the Zoom. All right, folks, that's it for me. Actually, I'm getting ready to go to church. And so this is a great way to end the afternoon. Thanks, each of you, so much for taking the time to join me. It means a lot. And I love spending the time talking about the markets. And any way I can help, just let me know. DM me. If you prefer to be friends and then send me a note, perfect. Otherwise, I'll see you guys on the stream. Let me get this PowerPoint to you here. How are we going to do this? Let's go share. Copy link. I'm going to say view only, and then you can download your own copy and change it however you want to. So it's in the meeting chat right there. And I will also put it in the Discord so you can have it. And then, yeah, we're all good. Thanks so much, everybody. And I'll see you all on the streams. Take care. Oh my gosh, I did not record this. Holy smokes.